Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is December 10th, 2015, and today is Thursday. So looking at the economic calendar today, we got two major numbers coming out for two currencies. First, we have the Swiss franc. That's at 10:30 this morning. We have a rate decision there, and then obviously a press conference coming out shortly after that. And then at 3:30 South African time, GBP press release of a rate change number, also interest rate number coming out at 3:30. And then last but not least, we have one more number coming out for the USD. That's an unemployment number coming out also at 3:30. So across the board, we've got a couple of numbers coming out. Let's look at the graphs. EURUSD, big rally yesterday, continuing back to the 110 level. We're just hitting that 110 level, and we're selling off just below that. Only a fraction of a pip, just below 10. So, I mean, this would be a bull flag. We did mention that there was a support level here at 108, and sure enough, we just carried it through and then really rallied just yesterday. If you look at this, just a continuous buy throughout the day. We're selling off here in the early mornings. The question is, are we going to continue this rally? So, I mean, all in all, when we look at a weekly chart, this is the first time we've had something this strong in such a short period of time. I mean, we saw this initial reaction before. However, testing it 3 times and then rallying off of it is a bullish move. So, I mean, it's not to say that we're going to 120, 130, 140, but we are in a reversal here, and the reversal is a bullish move, at least to this 113 level. So keep an eye on the EURUSD today for that. Looking at the New Zealand dollar yesterday after news came out, also a big rally for it, as you can see, but we're still trading in this range. Okay, so these two major ranges between 0.67 and 0.64 are good indicators to short the top of the range and buy the bottom of the range. So that's one trade over there. Looking at the Dow Jones still kind of sluggish yesterday, not really doing much. We've had these crazy moves this week, rallying a little bit, opening up on the downside and then rallying a little bit, but again, not showing us that it's going up. So, when stocks usually trade in a range like this, it's quite bearish. At least not in the immediate interim, but down the line, once it's trading in this range and it's got this wall at 17,850, it doesn't want to go above. It usually goes lower. I mean, that's just the nature of the markets. They're not going to just level off and just sit there for an extended period of time. Looking at oil still selling off, as we can see here, bouncing a little bit, but really dead on its tracks at $37 a barrel. Still very, very weak, and this is what I keep on saying. And so, you could take shots at oil here and there. Just be careful if you are building a long position, just to make sure that you don't get hurt and cover yourself and ease into the position, not overextend yourself with buying too much and then finding yourself in a situation where you cannot recover. Looking at the CAD, USD CAD had news this week. Also, we tanked at the news really, and then we kind of leveled off, and we're finding our ground here. The question is whether or not this is a real sell-off, or it's just a correction, and then or it's a new trading range. So all in all, we've been testing this 135 level. Let's keep an eye on it to see if it does breach it. Maybe we could go into this 134-ish level mid-range to see if it does sell off, because usually these type of volatile moves are replicated with a mirror image in the opposite direction. We didn't see a case in that with the EURUSD, obviously, because that's showing that there's real strength. But when you do have these type of run-ups, many times you do have a correction that follows. So, those are our trading ideas for today. I want to wish you guys a great trading day. Thank you. This is Razak at CM Trading.